The risk averseness of Canadian investors versus the US is quite apparent right now. The old saying, sell in May, go away, does not feel like it's happening in the US stock market. I mean, this market is on a tear in the last several weeks, and that's a lot of risk being put on. Tim Hodgson, who is ex-Goldman and ex-Hydro One executive. Top notch. That could bring some comfort, I guess, to investors and operators. You know, he's quoted saying, we're going to go out west very soon to spark projects in Wu provinces. So I don't know what the business mood is going to feel like. Obviously, having Hodgson in there is pro-market, which is great. But you need clarity. You need understanding of where the capital is going to be allocated. All right, John, welcome back to the tank here. Lots of data coming out and some lack of data to talk about this week in the tank. So first off, we got the CVCA report out on Q1 numbers around venture capital and private equity investment. And let's just say deals are down. Total dollars invested is well below the norm that we typically see when an ecosystem like this is apparently recalibrating. Average checks are going up. So the dollars are sort of coming in at certain companies, but the number of companies that are being funded are much lower. So just to give our audience some headlines here, the seed and pre-seed market is in pain. From my perspective, we're actually quite busy and we're seeing a lot of deals being done, but obviously these are things that have been reported. A lot of our deals are not reported. So there's 116 Canadian VC deals done in Q1, the weakest since 2020 at seed and 2021 at pre-seed. But the dollars are staying the same, around 1.26 billion. Obviously, thanks to a lot of the bigger later stage checks, which is always the case here, John. So what are your thoughts on this? Do you think some snap election, affected this? Trump's 25% tariffs? I don't really think so. But what are your thoughts on this so far?
Yeah, the typical reaction is, oh, that Trump. Hey, folks, those numbers haven't been reflected yet. So wait for the next 3 quarters and see what the Trump effect might be. And let's just, I don't know, take a flyer at it. It's not going to go up. It's probably going down from there. So this is only a 5-year trend line. And, you have the COVID effects, et cetera. So it's not exactly, perfect to conclude from an overall trend line when you take even the 5 years before, say, the COVID period. But it's very clear in the last 5 years, a few things are happening. Number one, foreign capital coming in is dropping. When we looked at the previous 2 or 3 quarters, there was always some really big deals funded by the Americans in particular in their own location. It's dropping as well too. But what you do is you sort of revert back to your domestic environment because of the localization of the VC business. So when you extract the Americans out, you got to look at the Canadian domestic VC activity, and that's dropping. Matt, as you had indicated, it's less deals. The average deal size is slightly going up, but then when you extract AI related deals from it, it gets very, very low. And the third thing I would just say is the area that I get most concerned about is what happens at the earliest stages. And you're absolutely right. It's not perfect data, but the comparison is not perfect either. So it's the same imperfect basis versus the imperfect basis. The early tells is that's decreasing. And the problem with the early stage is if the early stage is down, of course, there's not going to be later stage capital that's going to follow it. And all I would just simply say is access to capital is becoming an issue again. Matt, this is why you and I reacted as vociferously as we did a year ago on the April 2024 budget. There was a number of pundits who said that was bullshit. It will have no impact. Do you need more data to see what happens when you tax capital? So I have anxiety about what this government is going to do to at least avoid any uh, massive mistakes like that. And perhaps is there opportunities where they see that they could help stimulate more capital? And frankly, it's probably going to, and it needs to be the stimulation of capital coming from LPs. And that's the issue.
Access to capital is the drum beat we've always been pounding on, ever since I entered this industry, which I think is still going to be an uphill battle with this government. But I will tell you what we're seeing on the ground level where we invest, John, and you tell us what you're seeing at the growth equity stage. So at our stage, we're inception investors. We're at the pre-seed stage trying to get our companies to seed and Series A. In the first quarter of 2025, we had never been busier with follow-on financings. We had 5 follow-on financing, and 4 of the 5 were done by U.S. investors. The other thing that we can notice is that the size of the rounds that we were going out for were oversubscribed by U.S. investors. So let's say we went out to raise 3 million, we raised 5 million. If we went out to raise 5 million, we raised 7 million. So there is a ton of capital actually happening at the seed stage. It just happens to come out of the U.S. market for the best companies, which is a problem. And that's just because they're willing to be more competitive and pay up. But the other thing is that I think is also going to be showing in probably Q2 is the graduation rate of companies from seed to Series A and beyond. And that's where the rubber is going to hit the road, because I think that's the stage that's still very confusing for a lot of companies and for obviously Series A investors, because $1 million is no longer the mark for you to get a Series A round done. Sometimes it's got to be 3 million. Sometimes it's capital efficiency that matters. Sometimes it's retention, utilization, like really hardcore metrics that may have only come into effect at the Series B stage are now getting pushed on founders at the Series A stage. And so in Canada, I think what the problem is that you're right. The access to capital is not there at the inception stage where we are. It's still not as much needed at the seed stage. But I can't imagine what it's like at the growth stage right now, with you've got 75% of the capital in the US going to the top later stage, multi-stage funds. What are you seeing out there, John?
So what we're seeing is U.S. capital is focusing in on U.S. projects. This always happens, when you get to a period of, we've moved from a period of greed to a period of fear. In periods of fear, you revert back to your domestic base. And they're doing that. So this is why in Silicon Valley in particular, you're seeing, basically business as usual. You may not be seeing that in the rest of the United States, but even if you're in New York, you might be gravitating to moving your business into Silicon Valley where the capital is. So in Canada, the problem is, where is the capital and where is the capital pools that will replace, it's not going to be a full removal of US based capital, but it's going to be reducing back to its long-term norm. And what I am seeing at the later stages is risk coming off, meaning capital pools are basically getting very conservative. They're pulling back actually from investing in the United States, given all the political machinations going on. And then you would perhaps conclude in saying, if you're redirecting your capital away from the United States, back to Canada, what asset classes are you moving that to? And what we're not seeing is a movement towards risk asset classes, which venture and growth are. But, where are they moving into? Is it fixed income, et cetera? And I do get a feeling of, let's wait and see how this whole tariff stuff comes out. But the problem is, you've watched the Americans in that in times of fear, they start plowing dollars because it's less competitive. I worry in Canada in times of fear, we get fearful. And when you should be doing the exact opposite. And the irony is in 2021, when you and I were saying, oh my God, take it easy with your deployment, they were plowing in a rising market and retracting in a falling market. It's got to do the opposite. And so we'll see. I hope I am wrong, but that's what I'm seeing on the ground.
Yeah, it's so funny you say that, John. Like the risk averseness of Canadian investors versus the US is quite apparent right now. The old saying, sell and may go away, does not feel like it's happening in the US
Yep.
stock market. I mean, this market is on a tear in the last several weeks. And that's a lot of risk being put on. Some people may say it's overbought, but some of the moves in the Dow and the S&P are just astronomical compared to where
Yeah.
we started the year, right? Which is basically people putting more risk on.
So, Matt, you know what's hilarious about this? 2 weeks ago, how many times did you hear about the denominator effect
Right.
in large capital pools? So, for your listeners, what that really means is you have an allocation of your private assets as a comparison to your, less risky perceived public assets. But when the public assets go down, you can't allocate as much risk to your private assets. Uh, 2 weeks later, I don't know about you, but my stock portfolio is up higher than it's been all year. I, it, so the denominator effect is absolutely gone. And the very smart capital allocators saying they don't care so much about it because they know of the volatility in it. So we'll see, who is actually talking about denominator effect now when your public portfolio performance should be as high as it's been all year.
I mean, look at just some of the recent IPO filings. You had eToro go public. Stock was up almost 40% in its first day. You had Chime filed to
Chime.
go public as well. You've got a couple other fintechs looking to go filing to go public soon as well. So it looks like the window is opening. And what we feel here in Canada is probably much different than what it feels like probably putting
Yes,
capital to work in the States. And I
correct.
think that also has to do with the uncertainty. So we've got Carney's new cabinet now being put together.
Yeah.
There's some people in charge that I didn't think would take on the roles that they did. For example, Evan Solomon, a journalist, taking on the AI compute mandate, which is a pretty big role. I would say you would agree with that.
Yeah.
Solomon
Yeah. Yeah.
was, I guess, fired by the CBC in 2015 for
Mm-hmm.
brokering secret art deals. Just so people know, there's some stories about there on that. We've got similar cabinet ministers from Trudeau's cabinet jumping back into similar roles here. But the biggest question I think that we're all asking is, where's the budget?
Yeah, that is the surprise. And, again, our job is, we've gone through the election. God forbid we want to talk about election anymore. And I am past that. We got to talk about let's support the government now and whatever we can do. And the promise has been, and it was communicated during the election, is Carney's movement, center right, at least from an economic perspective, and that was the promise on that. And the only two early tells that you can make a determination of whether this is going to happen is the composition of the cabinet, and I'd say, on the balance, like I'd say at best that was a neutral indicator because there's still a lot of folks who people had deep concerns with in the Trudeau government. There's some, great additions like a Tim Hodgson that is very legitimate, but I'd say on the balance is, let's call it neutral. But then the second part was there was an expectation, as is normal, to do a budget, an actual budget to telegraph to the public where you are heading. And for any business out there, yeah, you don't do a budget. You don't do telling your investors, good luck. The reason why this was highly sensitive is the platform that the Liberals had introduced shocked the hell out of everybody, particularly those that were highly supportive of the Liberals who said, yeah. They have no indication of, they're not going to really spend that money. Yeah, it was egregious and it's going to be managed down. And then all of a sudden you get the news and we were going to expect in the next 2 months that this budget was going to come out and, you're going to get the real truth. And then you get, well, we're not going to do it until the fall economic statement is like, what? Seriously? We're going to go 18 months without a budget. And to remind your listeners, the last one was that horrific budget of April 2024, where, I personally had a meltdown over it. And we're going to really wait 18 months. Like, I don't think that was very prudent. And why wouldn't you, if you truly are moving to the center or center right economically speaking, why wouldn't you get out there to alleviate people's anxieties about it and communicate it? And that's the part that's now giving folks who even voted for them, a bit of a scratch in the head going, well, I'm a little surprised. And now you're hearing all this technical mumbo jumbo that you don't really need it. Well, come on, folks. It's not about that. It's about communicating what you said you were going to do. And it's already a little bit, starting to backtrack. And again, it's not fatal at this point, but, I think don't misread the mood of the public.
Right. I think it's quite confusing. So we've got the throne speech on May 27th. As you mentioned, there's no spring budget. There's going to be a fall economic statement. And Finance Minister Francois Philippe Champlain said they're going to skip the full 2025 budget, instead roll out middle income tax cuts. He was pressed on this by reporters, and his quote said, "The first action being taken by the government is to bring in a tax cut. The second thing we will do is outline the government's priorities for the next parliament, and then there will be an economic update in the fall. So the sequence is very clear and very logical." To who? Who is it very clear and very logical to? Because that doesn't seem like a budget is in the works here, John. And so the tax cuts they're talking about, we're talking about, I don't know, $800 per two income households is what the Wall Street Journal reported, costing $22 billion over 4 years. Obviously having New Energy and Natural Resource Minister Tim Hodgson, who is ex-Goldman and ex-Hydro One executive. Top notch. That could bring some comfort, I guess, to investors and operators. He's quoted saying, "We're going to go out west very soon to spark projects and woo provinces." So I don't know what the business mood is going to feel like. Obviously, having Hodgson in there is pro-market, which is great. But you need clarity. You need understanding of where the capital is going to be allocated. And I think punting out the budget to autumn, it really feels like we're in this policy vacuum. And that's going to be really hard for investors to do new business.
Yeah. I actually just think it's disrespectful to, folks that we're going through the issue of our times in this decade under this cloud of tariffs, and you're kicking the can. By the way, and again, I'm no expert on this, but even on the tax cut, and I know they stated it, but I'm not aware of any ability to do so without going through an official vote in the House and getting it ratified through the Senate on any tax cut. So if they have to do that, and yet there's still no budget, again, it just feels, again, I'm not the expert on this, but it just feels that expectations are being mismanaged.
Yeah, I read online that they still can operate and do all that without passing a budget. And that's something that I think, the government
budget or a bill. Can they do that without passing a bill in the House?
I believe.
Actually cut a tax, or I didn't know they can do that.
If the budget isn't passed, the government can still operate.
Yep.
It still has this ability to spend money.
Yeah.
But I understand what you're saying. Can they pass a bill without a budget that kind of precedes the bill? I don't actually know. I think it's definitely got to be passed.
Can you do a tax cut without a bill ratified in Parliament? I didn't think that was possible. That was the point. So are you just stating there's going to be a tax cut, but there has to be a bill in order to do so? And is that really just performatory theater? Because in the United States, it's a different process, but I don't quite understand it. But it feels like it's the first knowledge. It's the first time I've ever encountered that. I mean, I used to be a tax practitioner for 23 years, and I was never aware that you can actually do that until
So what I quickly saw here is Section 53 of the Constitution Act of 1867 says all appropriation, i.e. spending bills, have to start and be approved in the House of Commons. No vote, no cash. But at the start of every fiscal year, April 1st, the House routinely votes on an interim supply bill, which is usually 3/12 of the main estimates. I don't know what that means.
Yeah, for spending, though.
For spending. Yeah, but now if you're saying if they want a bill, though, to be passed, basically you're saying, can a bill be passed if there's no full budget approved? Correct?
No. Can you cut taxes without a bill being passed? That's the question. I didn't think it was possible. Not with a budget. Ignore the budget for the moment. Can you legally cut the taxes at that level without a bill being ratified in Parliament? I didn't
Let's see.
think that was possible.
Thanks again, John.
All right. See you, buddy.
Bye.